China holds $3.2 trillion in American assets. Treasuries, corporate bonds, dollar reserves, mortgage securities, equities, the largest dollar position held by any nation on Earth. And for years, one question has echoed. What if China dumps it all? If $3.2 trillion suddenly hit the market, the dollar would fall. Interest rates would explode. The U.S. economy would drop to its knees. Analysts called it the nuclear option, the financial weapon of mass destruction. But here's the truth. Almost no one says out loud, China can't use it. Not because they don't want to, but because pulling that trigger would destroy them first. $3.2 trillion isn't a weapon. It's a trap. A massive financial handcuff locking China and the U.S. together. And that trap is already unraveling. Quietly, slowly, and dangerously. How China built this $3.2 trillion trap. For 40 years, the world bought everything from China. Electronics, machines, toys, furniture, everything, all paid in dollars. Exporters handed those dollars to banks. Banks sent them to the central bank, and Beijing invested them into U.S. treasuries. It wasn't just an investment, it was a currency strategy. Buying dollars and selling yuan kept the yuan artificially weak, making Chinese goods cheap, which boosted exports, which brought in more dollars, which created more treasury buying. A perfect loop. In the end, $3.2 trillion is the accumulated fuel of China's entire growth model. And because the model depends on it, that money can't simply move. What if China dumps everything overnight? On paper, it looks catastrophic. Treasuries crash, yields spike, mortgages hit 13 to 14%, housing freezes, banks wobble, the Fed prints mountains of money, inflation roars back. A nightmare for America. But for China, it's suicide. If the dollar falls 30%, China instantly loses 30% on its remaining $2.5 trillion in dollar assets. That's $750 billion gone. Yuan then rockets upward, making Chinese goods 40% more expensive overnight for American buyers. Exports collapse, factories shut down, employment falls. And it gets worse. Chinese companies owe $3 trillion in dollar-denominated debt. If the dollar crashes, that debt becomes even harder to service companies' default. Banks crumble, the government prints money, inflation surges, social unrest follows. If China pulls the trigger, America bleeds, but China dies. That's why the nuclear option stays unused. China is trying to escape, but it's drowning. Slowly. For 15 years, Beijing has been working on 3 exits. 1, gold accumulation. Officially, 2,300 tons. Unofficially, likely above 5,000. 2, a dollar-free payment network, CAPS, the yuan alternative to swift growing, but still tiny. 3, shifting the economy to domestic consumption. Consumption was 38% of GDP in 2010. Now, it's about 55%. Still not enough. All of this helps, but escaping a $3.2 trillion trap takes 20 to 30 years. The race, who breaks first? China's full exit timeline, 2045 to 2055. But America's problems are accelerating. U.S. debt, $38 trillion. Annual deficit, $2 trillion. Dollar reserve share, 72%, 56%. If the dollar falls below 50% by 2028, confidence breaks. The system shakes. So the race becomes, will the dollar crack first, or will China escape first? Right now, the answer is clear. China doesn't have enough time. The U.S. is trapped. America knows China holds $3.2 trillion. That limits how aggressive Washington can be. They froze Russia's $280 billion in reserves, but they can't do that to China. Because if China has nothing left to lose, they dump everything, and both economies burn. So the two nations remain tied together, like two climbers connected by the same rope. If one falls, the other is dragged down with it. The next 5 to 10 years, expect to see more Chinese gold buying, more yuan-based trade, fewer treasury purchases, more U.S. money printing, a steady decline in the dollar's dominance, and ultimately 3 possible outcomes. 1. Orderly transition, 20%. The dollar loses supremacy without a crisis. Extremely unlikely, requires perfect management. 2. Crisis transition, 50%. Confidence breaks suddenly, markets panic, global crash. This is the most likely path. 3. Mutual collapse, 30%. The dollar fails from internal problems before China escapes. Both economies fall together. Final message. This isn't a story about China versus the United States. It's the story of a 40-year financial system coming apart. $3.2 trillion isn't a weapon. It's a hostage situation. And the clock is ticking. China's system is cracking. America's system is straining. The only question left is, will the trap slowly unwind, or will it explode? We'll find out soon.